what is their tax philosophy? Is it an ethical company or are they trying to take shortcuts? So GST came in 2017.
Correct.
Today we are in 2024. 7 years have passed, but still there are a lot of people in the finance sector of companies who still don't have clue about what GST is. From a MSME or a startup perspective, what is important for them is to first define what is their tax philosophy. Today the internal audit function sadly is not taken seriously by the companies. Most of the companies today have tax disputes. 95% of those disputes are transferpricing disputes. In the area of independent directors, I would like to contribute more. I'm as an independent director myself, and also to aspiring independent directors. Try and help them, mentor them. So it's not that absolutely there are no incentives. Government has still continued with some of the incentives. Instead of evading tax,
Plan tax.
Avoidance of tax is legal. Evasion is illegal. Now, instead of always criticizing the government that, my taxes are not being utilized because I don't see the right kind of roads, as a corporate citizen, it is your duty, a democratic duty under the constitution, to pay the taxes to the government.
So, independent directors, that if you feel that, I just want board position, the job is not done. The job actually begins after that.
Absolutely.
We are already part of 1 or 2 boards, but we came because somebody invited us, but हमको पता नहीं क्या करना है.
So if your tax philosophy is based on sound ethics, an ethical way of doing business, then most of these things of like fudging the P&L account or balance sheet or window dressing of the accounts, which these are terms which we often come across, should not happen.
Welcome to Where Leaders Thrive, the podcast which dives in to the minds of business owners who are shaping the future. And in this journey, we have today with us Mr. Sandip Mukherjee.
Hello.
Sandip ji, welcome to this podcast series.
Thank you.
And thank you for accepting our request and being here with us. Sandip ji has been a chartered accountant with 35 years of experience, and with his experience at the risk, taxation, compliance, advisory, he comes with wealth of experience which a director or which the promoters or even the professionals need to possess when they are entering the boardrooms. And that's where we are going to speak about his journey and the learnings from his journey. So welcome, sir. Thank you so much for being here.
Thank you for inviting me.
Thank you. So, Sandip ji, my first question to you is, speak about your journey of your career, your profession, and how you have navigated this journey. So maybe, your international experience and your experience with working with big fours. Yeah,
thank you, Divya. So if I were to summarize the journey of 35 years that I have spent so far in my career, in a short time that we have, I began my career, first of all, I decided to do my chartered accountancy, which was a big decision, because after we do our graduation, and I did my graduation in commerce, there are so many avenues and so many options available. I had decided to take up chartered accountancy, so I had done that. After that, of course, I also did a master's in business. But after I did my chartered accountancy, I completed and all that. Again, the decision making became an important issue, that where would I want to be in practice, or I would want to join some company in the industry. As luck would have it, I was destined to be in the company. So I basically joined a service company. I was inducted into internal audit of all things to begin with. But that was my first experience. After my internal audit, then I got an opportunity to get into tax. So out of the 35 years plus that I have, most of the time I have spent in tax. So after spending a lot of time in the industry, the first 5 years in the industry, I thought that it's probably a good opportunity for me, or a good time for me, to get into consulting. Because unless you have the base knowledge, it's not right to be a consultant, I always thought. So that's when I got into consulting. I joined Pricewaterhouse, which was in those days Pricewaterhouse, and later on it became PricewaterhouseCoopers, PwC. So I was with Pricewaterhouse for a long time. Then I joined other consulting firms like Arthur Andersen, which no longer exists, but it used to be one of the top big five, the biggest of the 5 top consulting firms in the world. I joined them. I was always in taxation, as I mentioned to you, so I was doing a lot of tax work. And then after that, I got an opportunity to come back into PwC, but this time it was not in India. I went to Southeast Asia.
Interesting.
So I spent about 6 years in Southeast Asia. And then after that, came back to India 2003 in Pune to set up the practice in Pune. Been in Pune since then, and was with PwC till 2016. Then decided to move out and then joined Deloitte, which is also one of the big fours.
Absolutely.
And the biggest today. Was with Deloitte for 4 years, and 2020, just before COVID, I ventured into legal firm. I started working with legal firm with Fox Mandel, which is one of the top legal firms in India.
Yeah.
Worked with them, and then I decided somewhere that I would want to now set up my own. So 2023, last year, I've set up my own practice.
Interesting.
I am totally into taxation, international taxation, especially corporate taxation. Also a lot of expatriate taxation, this kind of work, cross-border work. I do a lot, mergers and acquisitions, litigations.
Right.
And now I have ventured into a new area, which is ESG.
Interesting.
ESG happens to be the new area which is going to boom, I'm sure.
Yeah.
It's the need of the hour. So I'm trying to equip myself in the areas of sustainability and ESG. And I'm also a certified independent director, as you know. And that is what brought me into MMB.
Right.
And I look forward to this association with MMB.
So very interestingly, I think when you speak about ESG, that's the space where a lot of consultation, lot of expertise is needed. And I'm sure with your vast experience with the working with the big fours and the top law firms, you're going to add a lot of value on that space. When we really talk from the board leadership, and with this 35 years of your experience, we would love to understand more because you have interacted with a lot of businesses, lot of whether they are in manufacturing, service industry. As a consultant, how have you seen the governance shaping in those companies, the boardroom practices of those companies? What are the gaps you still feel are areas where a lot of work needs to be done?
Thanks for the question, Divya. When we talk of governance, the things that come to our mind would be, first and foremost, what is governance? Governance basically to me is a set of rules, policies, procedures, which help the company to function better. It helps the company to be stable, it helps the company to grow, to compete, and to basically comply with all that is there, the law of the land, the regulations, etc. So when you put all of these things down in a proper structured manner, that is what corporate governance to me is. And in that, the role that a risk and reward play is very important, because every company wants to take risks, every company wants reward, but at the same time they have to comply. They have to be within the corporate governance mandates.
Or the 4 corners of the law.
Absolutely, the 4 corners of the law. So that is the most important jugglery which is done. And most of this work is done at the strategic level in the board. So that's where we look up to the board to see that what kind of corporate governance policies are being set, what kind of strategies are being set at the board level. And when we talk about my experience, I have seen the strategies which I have been used to dealing with more are the tax strategies and the finance strategies. So when it comes to the tax strategies, the first and most important aspect is the government, is the company complying with what the government wants to do, or what is their tax philosophy? Is it an ethical company, or are they trying to take shortcuts? I have had all the kind of experience, of people who want to take shortcuts, because that has been their secret of doing business. And there have been companies who want to be absolutely ethical in the way they work. So I have seen both kinds. I must say that there is a huge gap still prevailing in our country, and no wonder we still just have about 6 crores of taxpayers, individual taxpayers in this country of 140 crore people.
Correct.
So that shows that there is a huge gap. Companies still want to take shortcuts and they still want to do business such that the tax is not in priority. We always say that the business decisions, tax should not obviously trigger the business decisions. It's commerce or business that should define the decision or decide on the decision making. Tax should not be the priority. At the same time, you can't ignore the tax part of it or the finance strategy part of it.
Correct.
So yes, being a part of Big Four firms, I have had the opportunity to do several presentations before boards on various strategies. Often companies have, the board has invited me and my team to talk about any new tax policy or any new tax strategy or a planning opportunity. And all that they would want to know is that how much can we save through this tax strategy, how much can we save.
Correct.
So that's been a very important part of my journey.
Super. Now, when you talk of the gaps, and I think one clue what I take from your conversation is the tax philosophy. Can you dwell little more on how the philosophy or the tax philosophy should work for the SMEs and MSMEs or even the startups? And we've seen, there are a lot of not so good practices being followed in startups, and that's where land those startups in challenges. So can you speak a little bit about the tax philosophy, what it should be?
Sure.
And definitely it will differ from company to company, business to business, industry to industry. But what is the crux of, the philosophy which everybody should learn from this podcast?
Right. So I think that's again a very important and very relevant question in today's business, because as business is becoming more and more dynamic, there are global trends which are coming in all businesses. Technology is playing such a big role in all forms of business. It's important that the companies also evolve themselves as far as the tax strategies are concerned. Even tax has changed, has evolved over the years. Today, we have a lot of changes that have been brought in thanks to technological changes and all that. We have faceless assessments, we have digital revolution in taxation and stuff like that. And India is no longer an isolated country. It's a global country. It's a global economy. The economy is, one of the largest, 5th largest economy in the world. So keeping all this in mind, from a MSME or a startup perspective, what is important for them is to first define what is their tax philosophy, like a tax charter. Like every country has a tax governance charter. The Indian tax system also, this is something which very few people know.
Exactly.
There is a tax charter the government has. How many people know that? What is the charter? What does the charter say? What does Indian tax civilities charter say? And after that, use that charter to build your own company's charter. Just like you have a memorandum and articles of association which talks about your main objects and allied objects and stuff like that. It's important to also have a tax charter. The tax charter will define what is the tax philosophy. And the 4 or 5 important things, there are many, but the 4 or 5 top things which we can talk about.
Right.
First and foremost is awareness. How aware are your people who are dealing with this function of tax and finance about the changing laws and regulations? So GST came in 2017.
Correct.
Today we are in 2024. 7 years have passed, but still there are a lot of people in the finance sector of companies, of all kinds of companies, who still don't have clue about what GST is.
Exactly.
But they are managing that function.
Yeah.
So awareness is very important. The next thing is, what is your philosophy as far as transparency is concerned? How transparent are you going to be? A lot of people don't want to reveal everything. That is sadly still a very majority kind of phenomenon we
Right.
get to see, where they don't want to reveal everything. They say that isko daba ke rakho. It is better that this is not known. Is that the right philosophy? It's not an ethical way of doing business. But we have to make a change. That's one reason why the government is trying its best to reduce the taxes and widen the tax base. And they're saying that come forward, be transparent, and disclose your actual real income and pay the right amount of taxes at a lower tax rate. So that's something which even the taxpayer, the company, should collaborate with the government. So the tax transparency, I would say, is one of the important charters. Third would be the compliance. I mean, today compliance is so important, whether it is a regulatory compliance, whether it is a tax compliance, company law, SEBI, IBC, all of these require a lot of compliances. So how compliant is that company? Again, it is linked to the first two, awareness and transparency. If you are aware, if you are transparent, then you will ensure that all your compliances go in time. Otherwise, you will have these issues of TDS not deducted, tax not deducted, or tax deducted but not paid
in time. And
those
then
are all.
You don't mind paying interest to government and saying that we are using their money and they're simply paying them interest, but that's not the transparency and the compliance.
Yeah, and most cases they feel the company's philosophy. Again, there the board plays a very important role.
Yeah.
If the board says no, we do not agree, our policies are not going to support this kind of unethical behavior. So then the people at the middle level and the people at the top, at the lower level, would not be able to go away.
Right. So the tone has to be set from the top.
Yes, it has to be.
Interesting.
So tax compliance becomes very important. Risk management is, I would think, a very important area again. How do you manage your risks, whether it is financial risks, you have financial risks, like, exchange differences, because of that exchange fluctuations, that's one risk. Then you have got risks related to reputation, you have risk related to product, branding. There are so many different kinds of
risks.
Sorry?
Right. Invisible risks. Every risk may not be monitored or maybe monetized in terms of, you can't kind of add value to it, but then those risks may have very severe repercussions.
It has severe repercussions on the reputation of the company. We have seen a lot of companies which get tainted because of that. And I have been a part of Big Fours. A lot of Big Fours have gone through this. Without taking names, I can tell you, big names have got tainted because of reputation risks, which have come about because of risk not being managed properly within the business. And last but not least, I would think the importance of internal audit and monitoring. Internal audit plays a very important role. I began my career, as I told you, in internal audit. But then I moved to tax. But I still remember the internal audit principles are so important. Today, the internal audit function, sadly, is not taken seriously by the companies.
Absolutely.
It has to become a very, very important, serious function within every company. The internal auditor is akin to a statutory auditor, in my view. There is not much of a difference. Just that internal auditor's salary comes from the company. Statutory auditor's salary does not come from the company. It's the fees that is paid by the company. But the functions are one and the same. The internal auditor cannot be collaborating with the company to do the audit. It has to be an unbiased way of doing the audit. And the monitoring should also be very tough. So all of these things are a part of the tax charter. The company, if they bring out and lay down proper tax charter with all these issues identified and well laid out, and just like a new employee comes to the company, as a part of the induction, you give the person HR kit and this kit and that kit. Tax charter also becomes an important toolkit for the finance and the tax person especially. That look, you are going to be a part of the finance and tax department. Here is what our company's charter says. So that, I think, I have seen some companies have it, but most of them don't.
In fact, this brings me to a very important point. Today, entire world is looking at India. India is a kind of a brightest star. And when the lot of foreign investments are coming to India, Indian chartered accountant firms need to kind of escalate their practices, the way they are consulting, and bring the practices at par with the big fours and the big six of the world. And that's where I think these kind of practices to be incorporated, and the advisory on these aspects need to come up. In fact, very recently I was talking at a forum, and where we were interacting with few best leaders in the industry, and they said that as business leaders, I mean, we want the CA fraternity or the advisory fraternity to raise their standards also. So that every time we don't have to go to the big fours, and we are having the best talent in, our country. So having the tax charter, I think, I don't know, I mean, I've heard for this term for the first time, but such practices, if incorporated for the even smaller clients from a very small, their journey when they're very small, that will help them to strengthen their processes and emerge as the better leader when they're growing.
Absolutely.
So very well said. This also brings me to another question about the independent director's role while the internal audits are being done. And in fact, I'll tell you, I sit on few boards as independent director, and I'm really blessed to have wonderful co-independent directors with me. And while the discussions around, we very, very strongly discuss with the internal auditors who are external, and the internal auditors who are also the internal with the company. And that conversation kind of brings in a lot of perspectives which usually you will not speak at the board. Right. So there is always a scope of improvement. I mean, howsoever you are well governed, howsoever you are well compliant, there will be some areas where there's still improvement needs to happen. If you're following certain practices, you still can improve on something. So very well, pointed out on that. So I would want, you to highlight maybe some case study or maybe some instance where independent directors can play a much wiser role while interacting with the statutory auditors or while interacting with the internal auditors.
So while there are several, Divya, two things that immediately come to my mind. One would be the area of transfer pricing, which is basically related party transactions.
Right.
Now, Companies Act talks about related party transactions.
Right.
From a domestic perspective, it has provisions which prohibit the way you carry out transactions with related parties. But transfer pricing is a more global perspective. It's more at an international level. And today, with most companies doing business abroad, especially with related parties, it becomes important to manage the transfer pricing related risks, transfer pricing related compliances, and a lot of best practices which come along with that. So in that area, independent directors can play and are playing, or are supposed to play a very, very important role. Why? Because a lot of companies ignore this aspect when they are doing business with related parties. And I'm giving you examples of companies which would fall in this. Holding subsidiary companies. Especially in the IT industry, most of the companies that we see, and we have a lot of them in Pune, IT companies who are subsidiaries or they are called captive. Back office kind of work they do. A lot of companies do even good high quality designing work, but they are captives in the sense that 100% owned by the holding company, which parent company is either in Europe, in US, Singapore, wherever, and entire business is being done for them. So the only transaction that they have is with the parent company. So an invoicing happens on a monthly basis, and that's how it's on a cost plus basis generally. So what is cost plus? It's a transfer pricing concept. So you incur 100 of cost and you raise your invoice and you say, you pay me 110. Is that 10 that you are charging the right price? Tax authorities might have a different view. They might say that no, anybody else doing a business like this would not be sufficient with 10. Because it is your parent, you are saying that you just give me 10 more. That's it.
Correct.
And it's an arrangement.
So at arm's length.
It has to be at arm's length. So that's where transfer pricing comes into play, and serious amount of efforts and work has to be done. Believe me, There are a lot of databases, comparatives which have to be checked. There are statistics which is involved, mean, median, all that quarantile, all those things happen when you do and come up with what is the range within which you have to charge. So if the range comes to say plus or minus 17%, then 10% is less. That's where the disputes happen. Absolutely. So what independent directors need to do is understand the companies. First, identify how many related parties do we actually have. It's all readily available, easily available from the accounts. Who are the related? What are the related parties? What kind of transactions we are doing? What kind of efforts have been made by the transfer pricing department within the company, and what kind of advisors who are there who are advising, who have come up with the transfer pricing reports.
Interesting.
That would at least mitigate the risks. Because if they find as independent directors when they come on board that the disputes which are there are all related to transfer pricing, and believe me, most of the companies today have tax disputes. 95% of those disputes are transfer pricing disputes and huge disputes. If that is the situation, then that person has to become alert. True. As an independent director. That why are we sitting on such huge disputes? That means something is not right as far as our transfer pricing
is concerned.
Documentation or methodology is concerned. Can we correct that? How can we make it better?
Correct. Nice. So, one more clue I'll take from your conversation is about the ethical practices, what a business should follow. And when I see the balance sheets of a lot of companies, they have very good top line, but they always will have a very thin margin at the bottom just to save taxes. And when they go and when they expand to a level where they are now eyeing for IPO, the IPO valuation usually is at the bottom line, the multiples of your PE. So then, they open up their eyes and then a lot of restructuring happens around it. So would you like to share some thoughts on the good tax practices which a business should follow, which will help them to not to go back and, then do a lot of plus minus and always have, been a consistent taxpayer? So what are the benefits of paying good taxes? So if you can speak on that.
Sure. No, so among the good practices, one thing obviously, like I said, is set up your tax charter and make that as a tax philosophy. So if your tax philosophy is based on sound ethics, an ethical way of doing business, then most of these things of like fudging the P&L account or balance sheet or window dressing of the accounts, which these are terms which we often come across, should not happen when it's basically tax. Tax is an expense at the end of the day. It is a cost, and obviously the company would want to minimize the tax as much as possible.
Correct.
For which they try to bring down the taxable profits, the profits on which tax is paid. So you might have a profit as per the profit and loss account, which is the net profits or book profits, but the taxable profits is a much lower number. How to arrive at a much lower number? That is where a lot of tax dynamics and tax planning and strategy is used. And while that can be done definitely in a more ethical manner, many companies resort to unethical means.
Right.
So it's important therefore to be aware about what are all the ethical means which are available to you. So one area of ethical mean is the area of incentives. Now today, while incentives have got reduced over the years, government wants to lower the tax rate and reduce the number of incentives that are being given. Yet there are still incentives which are available. There are still backward areas where people can go and do their business. They can get some incentives. Startups, MSMEs can get incentives. If you are doing a lot of research and development, you can do. If you are into CSR, you can get incentives. So it's not that absolutely there are no incentives. Government has still continued with some of the incentives.
Correct.
So be aware of all these incentives. Try and instead of evading tax,
plan tax.
avoidance of tax is legal. evasion is illegal.
Right.
So how to
Very
avoid
interesting.
tax? Avoiding tax can be done through some of these means by
Right.
being aware about what
Right.
are the incentives
Right.
available and try and do it in that manner. At the end of the day, be aware that you are also a corporate citizen. As a corporate citizen, it is your duty, a democratic duty under the Constitution, to pay the taxes to the government.
Super.
Now, instead of always criticizing the government that, my taxes are not being utilized because I don't see the right kind of roads, I don't get 24-hour
That's the
water.
usual answer we get from all the
That cannot be the
taxpayers.
philosophy because of which taxes will not be paid. Because if taxes are not paid, then the non-compliance would also result into penalty, interest penalty and prosecution. So
Correct.
be ready for that. And today the jails are full of such people.
Oh my God. That's an eye-opening statement.
Yes.
Great.
The corporate frauds are things which,
Yeah, absolutely. Absolutely. So with this, I would like to speak about your personal journey. You moved out of your corporate career. You started on your own as consultant, advisor to a lot of businesses. And would you, speak to us about your journey going forward? What are your aspirations? And what value addition you would like to do to corporate world?
I think a part of it is here, what I'm doing today. This is something which I love doing, sharing, experiences with a platform like MMB, which is a fantastic platform. And in the area of independent directors, I would like to contribute more. I'm as an independent director myself, and also to aspiring independent directors. Try and help them, mentor them. I have been a corporate trainer myself as a part of my role within the Big Fours. We used to do a lot of corporate training. I have seen young chartered accountants who used to come with stars in their eyes, entering a Big Four, and how to guide them, mentor them. And today most of them are very senior positions. Some are partners in these Big Fours. So this journey, this mentoring process is something which I enjoy. So that's probably something which I would love to do in whatever capacity I can. Share knowledge, share experience, and somewhere tax is a subject which is very, very close to my heart. I'm very much passionate about the subject.
Correct.
I still go through the finance bill religiously and meticulously, and I attend all the conferences and all the webinars, because technically I would want to keep myself aware. And that's one thing which I keep telling the people with whom I mentor, that most important thing is the technical skills. Do not ignore the technical, because people think that will come naturally. It doesn't. You have to work very hard for the technical skills.
Correct.
The other things, most of it, of course, come through experience, the softer skills, some of which you can also acquire. But technical skills, you have to be very, very disciplined in reading and memorizing and talking with the right kind of people, being a part of these right forums. So I would want to continue these best practices as much as possible myself, and wherever I can share it with the next generation and the generations to follow. I would be privileged to do that.
Absolutely. In fact, I take a very important lesson from this conversation, and that is for independent directors, that if you feel that, oh, I just want board position, the job is not done. The job actually begins after that.
Absolutely.
I mean, just imagine a board meeting and you are getting the documents hardly 1 day or 2 days prior to that, and you're supposed to read 1,000 pages, and then you're supposed to know everything what's written on those documents. Moreover, you're going to ask questions, digging out in those papers. A lot of times you may get half information. You don't have time to ask, and then the decisions are taken based on those documents. It's not that easy job, but I think with mentors like you, with consultants like you, I'm sure it's a journey which every independent director can navigate, and especially for the first time independent directors. And why I say so is because I've been speaking to a lot of people who say, oh, we are already part of 1 or 2 boards, but we came because somebody invited us, but हमको पता नहीं क्या करना है. Right? So lot of times people feel कि सिर्फ aspiring directors को ही पढ़ना ज़रूरी है, upskill करना ज़रूरी है, and once I get the board position, my job is done. In fact, I know few people, they were very active on the platform of MentorMyBoard, and the day we help them get 1 or 2 positions, the learning stops. They stop
Right.
coming to the way we create our experiential board learnings, the sessions what we conduct, and I think that is something which I really disconnect to some extent, because as a director you have so much to contribute to add value to the businesses and even to your personal growth journey. So with this, we come to the last question. What has been your journey with MentorMyBoard, and how do you see MentorMyBoard as a platform for leaders, not only the aspirant, but existing promoters, founders, and independent directors?
Sure. So I must tell you that I had not heard about MentorMyBoard till last year. Just about a year back is when I was talking to another colleague of mine who was also doing his independent director course along with me, and we were both chatting, and he mentioned about Nilesh Vikamsi, and we have looked up to Nilesh ji as our past president of our
As a role model.
institute, and
Yeah.
he's been a role model. So my friend is a very close friend of Nilesh. In fact, he was the auditor of the company where he was working. Nilesh ji was doing the audit of that company.
Yeah.
So that's how close they were. It was an auditor-client relationship. So he mentioned to me that Nilesh ji is involved with a very good platform. So why don't we contact him? Because we were looking at what next. Okay, we'll finish off this independent directors course in the next few months.
Correct.
Maybe we will do an ESG or something like that. But where will this take us? How do we actually get into the boards? Nobody will just call us and invite us and we'll become independent directors.
Correct.
We do not belong to a family where generally the family's members are called. So how do we do it as professional members? And we would want to be very selective. So then he said that let's speak to Nilesh. So that's how he contacted him, and he told us about MMB, and he said that look into the website and find out more. I went into the website, I saw what you people were doing, and I was very impressed. I said, yes, this is something which probably is in my line and my interest, and I would want to become a part of it. And how much I can contribute, that's something which you will have to decide. But I would be interested. That's what
Right.
brought me here. And I continue to be a part of that journey.
Thank you so much, and this is really very nice to hear. That people like you who have 35 years of experience, who have seen boardrooms from a very different lens, and then you finding value in what we all we are creating. So that kind of gives us a certain motivation and boost to keep doing what we are doing. So thank you so much for this.
Thank you very much.
And with this, we come to an end with the podcast today with Sandip ji. Thank you so much for sparing your valuable time with us on this rainy day.
Absolutely.
And it really made a lot of meaningful interactions and learnings out of this podcast.
I must say, Divya, you have taken a lot more trouble than me. Because I have just come 20 kilometers. You have come probably 200 kilometers from Bombay, waking up early in the morning to be here at 8 o'clock. So thank you very much for being here, and thank you very much for inviting me.
Thank you. Thank you so much. Thank you.